What is up, YouTube? Stocks by the numbers. Welcome back here. I wanted to do another update video on another EV stock that I know got a lot of attention, that I know a lot of people are getting pumped about, a lot of people are keeping an eye on. Name of the company we're looking at, Polestar Automotive. Ticker symbol PSNY, listed here on the NASDAQ. Stock right now closed 3 1/4, down 3 cents on the day, 0.9%. And as we see here on the 52-week range, we are near 52-week lows. Now, first of all, this was the first time I reviewed the stock right here, July 20th, and I did say I would just wait and not buy anything, and you could probably get it for cheaper. The stock began to pull back, as we see here, all the way down to $6, up to $8, pulled back down to, about 6 even, and then I did another update video here, just talking about how, obviously we got that one correct, and just to reiterate, the pricing and timing, discipline and focus and sharpness that everybody should have, right? But why buy a stock up here at 9.10 when we knew we could have got it for at least 5.6? And still at this time, I believe the company was not bringing in any revenue or not doing anything. They weren't in production at all. And I still said it will probably continue to slide and continue to go down. And, I would even afford missing out on some earnings and revenue to potentially take a larger position in a company like this at, as we see down here, at roughly $3, instead of even forcing our way in the 5s and the 6s. So the difference here, first of all, between this company, Polestar, and Mullen, is the fact that this company is now actually selling cars, right? So if we look over here, again, this is when the second video was made, the stock continued to slide, and then it kind of hit this bottom here, and it retested again, so I just drew that bottom trend line out. But I just wanted to show you guys that, see, it sold off here, and then you can see like the consolidation, and then earnings come out. And look here, honestly, it's more about a company like this actually getting to work and generating revenue. That's why you saw a pop in the stock, even though you're looking at this and you're saying, wow, they missed by 35% of estimates or whatever the heck. It's like, they were probably supposed to be in production already. As you see here, nothing was reported this quarter, and estimates of 400 or 500 million were already on the table. So estimates here, 675 million, a little extreme for a company that's literally starting from nothing, but they brought in 400 million in change, right? So holy shit, it's a real company, boom. So you see the pop here, it got right back above that 20-day simple moving average and ran up to this top trend line here that I'll show you guys in a minute, but it hit a high, it's saying, of 8 1/4. And then obviously big sell-off. I'm sure a lot of people got in, at 5.6 and took profits there at, 8, low 8s. And then as we see here, trunk back down, was fighting to stay above that moving average, came down, really bouncing around, going back to the top of the range here, right? But at least we know now that this is a company, whether you're trading it or investing in it short or long term, you're understanding that the company, okay, if they can maintain this, at least, they're doing whatever, $1.5–2 billion a year in revenue, at least they're, doing something, and it can't drop to, $1, right? So that's basically what it's telling you here. And then obviously bouncing around here, pulls back below the 20-day, and then boom, look at that quarter, phenomenal. Estimates of almost 700 million. The company posts almost $1 billion in revenue for the quarter. For the quarter, not the year, the quarter. So this was, as we see here, period ending December 2022. So this was the last quarter of the previous year. So that's last year's revenue. However, great quarter. So if this company's breakout quarter is going to be Q4, right, at the end of the year, then you have to hope that they maintain those robust numbers every Q4. Otherwise, what's going to happen is if these Q4 numbers begin to slip, then the company, again, on average, right, let's say 400 or 500 million in a quarter, but then you're looking for that breakout quarter of $1 billion. So if you add up these 3 quarters here, you're looking at like 1.5–1.6 billion. And then with that other billion, now you're up to like 2.6–2.7 billion, right? So if estimates are like 2.7 billion, but let's just say everyone got their car already, and next year this time this company posts like $700 million in revenue. Then the stock is going to take a larger hit back to the downside, because now investors, especially long term, are going to be very, very concerned about the full year guidance that was issued and expected, and what analysts came up with, and what the company said they were going to do. So that's why this is actually a more important quarter a year from this point than even this quarter that they just posted here. So I hope you all kind of understood what the heck I just said. If you didn't, let me know. But here again, we can see sold off. Apparently, I'm going to say they either kept it in the wedge, or if these loss numbers, Steam friend, but if these loss numbers were, just way too damn low compared to analyst expectations. And obviously, as you see, boom, they crashed it all the way back down to the low threes, bouncing off this trend line, and has since, been in this consolidation range again. They rose it up coming into these earnings back to this top fib here, 412, where the rejection was, and then boom, now earnings come in. Revenue is now light by 40 million, or roughly 7.35%. But they still brought in 546 million. Okay, so what does this tell me? First of all, again, this is like a 1-year chart. So first of all, what this is telling me is that when I made the first video and the second video, I was 100% correct. I'm sorry, I'm going to be a little cocky here with that one. Because if you listen to me and you actually haven't purchased this company yet, guess what? The first video was at 10, now the son of a bitch is at 3. So I just saved you a heartache of a 70% loss in your account. So now that means you can reevaluate the situation, just like I said you were going to do when revenue started to come in, and we can recheck the numbers and see if we may potentially even get this for even lower. And the idea of this, again, is pricing and timing. So your initial cost at $9, $10, or even re-entering here on the second video at $5, $6, see, that never occurred. So there is no dollar cost averaging that's taking place here. Your flat out cost basis is going to be, $3 or, $2.90 or, $2.60, wherever the hell it might go. And obviously, forget about seeing red or losses the entire time you're holding it now, which I'm sure a lot of people watching this video are. I apologize for your loss. However, again, long term, we established, a lot of you people that commented that you had a position in this and, you're being stressed out and it kind of sucks. Obviously, I can appreciate that. But again, remember, like I always say, stay confident in yourself and remember why you bought the stock, right? You probably had a lot of people on the opposite side of you, beating it up, saying, there are better stocks out there that you should, you could buy. You shouldn't tie up your money in that. And hey, listen, again, in the short term, yeah, okay, fine, they were right. However, in the longer term, it appears, based on the numbers that I'm seeing here, that you were right? Because again, the stock might have been overvalued to begin with, and unfortunately, that's what I keep saying on this channel, is that I know all of you basically have good intentions. You've heard and saw about what this company can do. You think they're going to start generating a couple of $1 billion. You want to get involved. You think the stock should be higher. I can respect it. But again, they overvalue these companies when they get listed. So if a company like this, which again was happening when I made the video, and of course, SPAC was, end of October in 21. But see what I mean? It had this initial pop, but again, the company wasn't doing any business. And at this time, I think the market cap was like 24 billion or something. $24 billion for a company not making a dollar, right? Think about that. There is no need to buy. And you could have watched this just crater all the way down, and that's what I mean. When it hit this level here of 6, then you could have said all right, now I can start piecing my way in. Maybe I'll pick up, 100, 200 shares here and there. And, I won't commit fully, but I'll start piecing my way in here in the 5 and 6s, right? It pulls back to 4. I'll add more. Wow, sick rally. Nice, awesome. Company's looking good. Wow, holy shit. Look, they actually made money. They're doing business, bouncing around, right? And now you have a situation down here where, of course, you can add to the position. So, again, I I understand if you got in early and you're very upset that you are down, but again, stay confident in yourself. Remember why you bought the stock. And again, it might turn out long term to work out for you because again, this is not just a pie in the sky dream anymore. The company's actually selling some vehicles. So that is awesome. This was an excellent quarter here. But I wanted to show you guys also, just coming back to this chart, is that we ran up here, right? And then boom, you have a big drop here on these earnings. Again, roughly 40 million short. Good profitability there. However, in the last couple of days, this is a big candle down here on May 12th here. And you can see these big red drops almost straight down, almost making our pole. And then we've been bouncing around in this downward range now. So this could potentially be our flag. So this could be our pole and our flag, which would make this a bear flag. And a bearish flag pattern, obviously, means it's going to go down. Now, if I back this up even more, right, these are the trend lines I wanted to show you guys, right? These were the lows that came in October, right before the company began doing money and that, doing business, generating revenue, and that's where they bounced off of, right? So we drew that trend line down there again, connecting over there at the other low that took place, looks like the end of March. And as we can see here, this started $10 and it spiked up. Yeah, it was like 1640, 1641. You can see was the high there on that candle. So I just whoosh drew that down across, and you can see, right, it touches the tip there. That was like, that was the anomaly breakout there, because again, you can't take every candle into account sometimes, because yes, it did explode, and then you have the other candle the next day cutting through it, and you're like, what's going on? But if you zoom in, you can see, look, that's where the resistance of that candle was, and then it, bounced, and then it came back up, and you can see it resisted basically right at that trend line again. And then you had the breakout, you had the bigger pullback because it was an overextended breakout, and then what happened? It ran up and stopped right there at that top trend line, right? So where the action is there, sometimes on the opens and the closes, that's where the actual trend line is, not necessarily the top of the wick. And you can see here, even coming down, yeah, it might be off a little bit, but again, you can see that's right where the resistance was, and then it bounced off and rejected, and that's right where it opened, right there on that skinny little candle right there. And then, of course, it came up and basically retested that line again. There's another retest. There's another retest. Even if you, shimmy it up a little bit, if you want to catch the top of this candle, the top of that, you know what I'm saying? I'm sure you guys get the gist of the pattern here that we're looking at. And the good thing is, here in the short term, again, immediately, in my opinion, I think we're setting up a bear flag, so I think the stock is going to pull back, and if it drops here to this bottom trend line, if I am correct, as we see here on the right side of the screen, you're looking at like $2.94, right? So you might have a dip here below $3 slightly here in the short term, but then chances are, just like it did here, and just like it did here, it's going to probably hit that trend line and then bounce up and, try to level out here, get back above into the low threes. However, this whole pattern, as we see here, is kind of forming a descending wedge. And again, a descending wedge is a bullish pattern. So you might have to deal with some volatility. It's showing here an apex the end of June, right? So that's, where the hell is that? Yeah, like 6-7 weeks maybe. So you might have to hold tight for some short-term volatility here in the next 6-7 weeks. But technically, you should have a breakout here, and it will probably pop up probably to one of these mid-fib levels, if not even the high one, because I know it's going to be a high-action stock when it does actually have the pop and turn bullish. Everyone's going to get an alert on it on their, trading accounts and whatnot. So you could potentially see 4. So if you want to try to really lower that cost average in the shorter term, again, if you wait for the drop and you want to potentially get in like sub 3 or around 3, 310, 320, and then you wait here, boom, and you have that pop up into potentially that fib of 412, let's call it, boom, you just made yourself a quick 30%, right? But again, that's if you want to be in and out, but, regardless of the situation, as I always say, for the most part, however dark the cloud, there's always a silver lining. And then the stock will most likely bounce around or potentially reject and come back down here to probably like the low to mid threes. And then boom, you're going to have earnings coming out the end of August. That's my birthday, August 30th. So you have estimates of a loss here on the EPS sign and revenue of a little over $600 million. Now, this is going to be the fourth quarter in a row now that the company is bringing in revenue. So now the statistics are going to start to change in favor of the company, hopefully if everything goes according to plan like they're hoping, because now what's going to happen is after this quarter, the next quarter is going to be 1 year after this quarter. And that's when the comparisons are going to be made, right? So obviously, I'm sure deliveries were below expectations because they were supposed to be making money, 6, 12 months before this. So the revenue estimates, that's what's going to pump this stock up 1 year from this date. So this is what, November of this year coming up, which is roughly 6 months from now. So what they're going to do is they're going to come out and they're going to post whatever, 600, 700 million, whatever the hell it is. And even if it's a miss, remember, it is going to be, 40, 50% revenue year over year growth, right? They're going to look for the positives. So that's why, even without looking at the numbers, I have an idea that, they might begin to pump this stock up here towards the end of the year. And again, in the short term, you could have a sell-off here and a pullback, but you may be lining up here in this descending wedge for a pop happening in the next 6 or 7 weeks. Now that we did the technical side, though, very quickly I want to go over the numbers because, unfortunately, it may be considered a little overvalued here, even at 3.25. Market cap of $7 billion, and remember, this big quarter here was Q4 of this year, so it's about $1 billion in revenue plus that. So that's what the company did last year, is $1.4 billion. So now moving into this year, you're trading what, like 5 times? Yeah, exactly 5 times, pretty much, yearly revenue, right? And we've seen other companies, again, trading at higher multiples. We've seen companies trading at lower multiples. But of course, because of the fact that the company was so overvalued to begin with, this is why I'm saying I don't think they're going to beat it up too much. But I do see, even like down here, like this bottom trend line here approaching the apex, that's what, like 2.75. So that's like a 50-cent drop here still from 3.25 where we currently are. So I do think they're going to bring it down. And let me see here. 50 cents on 3.25 is what? We could call it just like 20%. And again, it's trading 5 times annual revenue, excuse me, which means 20% drop, 1/5 would be 1.4 billion. So that would pull it back to a market cap of 5.6 billion, down at 2.75. And yeah, with the company bringing in, what did we say, 1.4 billion this year, and then we'll say what, even if they bring in, let's just say like 2 billion for 2023. Now you got a company that's, slated to bring in $2 billion in revenue for the year, and now they have a market cap of only 5.6 billion. Right? So it sounds rough in the short term, but in the longer term, if it does have that pullback, then down here at 2.75, in my opinion, it would actually be fair valued. And I would begin to really start to piece my way in here, because you have a company that is beginning to not only generate revenue and prove that, there's a want and a desire for their product, but more importantly, it's going to consistently keep growing. And yeah, they might have had a slow start, but if they're in line or even getting ready to announce that that they underestimated their projections for 2023 or even, 2024 down the road, that's when the stock is really going to start rocking and rolling. So again, in the shorter term technical analysis, you could have this pullback. So you could potentially say that you could be more patient and wait for 3, sub 3. But, not the worst time to really throw this on the watch list and keep an eye on it. Because again, 546 million, we extrapolate that out 3 more quarters, that's 1.5 billion. And again, if they come in with a big quarter like this, 800-900 million at least, boom, now you're doing what, 2.4 billion in revenue for the year. And again, if they bring it down here, you got a market cap of 5.5 billion, 6 billion. So boom, they're going to pump it up. It's going to be justified then to have that rally back up into these low 7s or 8s. You know what I'm saying? I'm sure you guys understand what I'm saying. So yeah, that's basically how I feel. And also, I called the pullback to 3. And if we switch over here to stock charts, I wanted to show you guys, looking at the daily, I threw on the pivot points here, and you can see it really fought and opened right there on that drop after earnings at that pivot point right there of 373. And, it just had to reject. It broke through that support level. That's why I'm saying I think it's going to go lower before it goes higher. The RSI obviously has been going down. However, the MACD has crossed on that big drop. And again, we have the potential bear flag. So, boom, next stop might be, $3 even, 294 or something, on a break. Switching over here to the weekly. And it's random add, not showing us too much. MACD relatively flat. That's why I'm saying it could potentially take another drop down. RSI could drop to 30, 28 before it, again, becomes more attractive, hits that bottom trend line, and then boom, has that bounce and rally upward. But, next support on the weekly, $1.75. Again, that's a little of an overreaction because the company is actually generating revenue now. However, just keep an eye on this one. And, hey, I was 2 for 2 here and got them right both times. And, again, going back to my initial point in the first video, it's all about pricing and timing. And that's what I kept saying. Why would I force myself in and buy this stock at $10, $11 a share when I can easily get this for $3, $4 a share? And that's basically what happened. So if you're involved with the company, again, stay confident, stay positive. Remember why you bought it. If you happen to find some liquidity, you can add to your position, do some dollar cost averaging, lower your cost basis. On the flip side, if you were contemplating getting involved here in the company, you might have to put the pedal to the metal, and you might only have a couple of weeks, as we showed here, before we have a nice pop and this thing really starts to rock and roll. So, I'm going to leave it there. Once again, this is Stocks by the Numbers. Thanks for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. Usually very quick to reply. Just like everyone on YouTube says, like the video, thumbs up, algorithm helps. Subscribe to the channel means a lot. Love watching my community grow. Join the Discord if you want. More importantly, moving forward, like I always say, I understand that markets are rocky and volatile and uncertain. So I want to wish everyone success. I hope everyone makes a couple of dollars. Thanks for stopping by. See you in the next one.